Abhishek Sharma of IIFL joins in to discuss that. Abhishek, hi, morning. Given that it is an integration cost issue that could be one-time in nature, do you reckon that it's not a structural problem and it's just, the business fundamentals of the company are intact and it's just a one-time integration problem?
The company basically gave out their FY16 guidance yesterday, first time. It is not only on account of the one-time charges that they are going to take upon on the basis of the integration cost, but also they have pointed out to the fact that their key flagship facility, which is Halol facility, is still undergoing remediation measures, because of which there are product supply issues for products which are emanating from that plant. The company is also in investment phase as far as the US is concerned. They're basically building out a sales force which is going to be required to sell their biological product that they have licensed in from Merck, and they are also ramping up their sales force for OTC and Ophthal. And there would be an increase in their R&D spend as the biological in-licensed biological product moves through the clinical phases. So it's not only on the basis of the one-time charges related to the Ranbaxy integration, but there are several other moving parts where essentially either the revenues are coming down or the cost is going up.
Okay, net, Abhishek, what have you made of the guidance? Would you only lower the FY16 numbers and expect a U-turn in FY17? And what's the rating on the stock now? You see the prices correct a goodish bit, 10% lower, 15% lower?
So my rating is still under consideration. I mean, so that is going to be out in the next 1 hour or so. But we have cut our EPS estimates significantly. We were anyways way below consensus because we did not anticipate, as our opinion, that Halol would get cleared, in a hurry. The thing that I wanted to point out on this is that even if Halol, let's say, if it does get cleared towards the end of this fiscal, or maybe even earlier, a sharp bounce back is not really feasible because the company would have lost market share as well as pricing on some of the key products, and for them to gain that back will only be a very gradual process because there are other competitors who would be supplying the a similar set of products. So from there it will only be a gradual pickup, and plus also combined with the fact that FY16 is actually a lost year for the company in terms of where they are, a couple of things which have not gone their particular way, I would expect the stock to react negatively today.
Abhishek, what about the rest of the businesses which won't be impacted by Halol? Have you changed your estimates for that, or do you expect similar growth rates or better growth rates as compared to FY15?
Similar. Essentially, the guidance was around these 3 or 4 things that the company discussed. It was around the in-licensed product, it was around the Halol facility, it was around the one-time integration related costs. So broadly, those are the things which have changed in my estimates. Everything else pretty much remains the same.
Okay. So can you just tell us what is your expectation as far as top-line growth for Sun Pharma is concerned for FY16?
Nil. We were anticipating. So I've just brought it in line with the company guidance, which basically says flat to negative. We have just kept it at nil, and essentially that is being driven by the US.
Just one word before, we're just awaiting the Infosys numbers in just a while from now. But before that, just a word on Cipla, because the company has approved a potential investment by FIL Cap Investments. Any thoughts on that?
I
wouldn't know that. I haven't followed the news.
Okay. All right, we'll get back later when we have more details. Thank you very much, Abhishek, for joining us. Well, we are expecting the INFI results any moment now, and the big number to watch out would be the dollar revenue at 2224, according to Reema Tendulkar's poll. That